Hey, this is Tom and welcome to the Value Investor by TipRanks. We're excited to have you here with us. And today we're talking about Tesla. Everybody has an opinion about Tesla. Some love it, some hate it. But nobody is completely indifferent to this phenomena that is Tesla. In today's video, we'll show you the bear case, the bull case, so you can research for yourself and find out if Tesla is the right investment for you. Let's get started. So let's be honest, Tesla is not the cheapest company in the market right now. If you're looking for cheap stocks, if you're picking up the cigarette butts from the street like Warren Buffett coined, Tesla is probably not the right company for you. If you look at their multiples, for example, price to sales, they're currently trading at 16, which is not that high for a tech startup, but quite high for a blue chip auto manufacturer. How high? Well, if you compare it to Ford or GM or Volkswagen, you're probably looking at 0.5 between 0.4. So while the rest of the auto industry is trading at 0.5, 0.4, Tesla is trading at 16. So literally, it's trading as if it's 30 times X better than Volkswagen, GM, and Ford, which I'm not going to say if it is or if it isn't. We will take a look at numbers and find out for ourselves. By the way, the highest multiple that I could find in the industry to date is basically Toyota right now. And Toyota are kind of the kings of the auto industry at this point. So they're trading at 1. So is Tesla 16 times better than Toyota and 30 times better than GM, Ford, and VW? Well, I don't know. But I will tell you that their numbers are quite impressive, especially when you compare to the numbers that some of these other companies are showing you. So let's start with efficiency. And for that, we have to talk about the margins. For a company that's only making 1 million cars per year, which is about 1/10 of what a Toyota or what a GM would do in a year. Toyota makes 10 million cars, GM makes similar amount of cars. So Tesla makes about 1/10 of the giants in the auto industry. And despite that, despite not having the economies of scale and the massive ramp up that comes with that, they have already the best, absolutely best margins in the industry. You can't run away from that. Right now, Tesla's margins, at least gross margins, are about 26, 27%. Depends who you ask exactly. So let's say it's 26, just for the sake of this argument. If you compare it to a Ford or a GM, you're probably looking at anywhere from 13 to 14%. And even Toyota, which again are the kings of efficiency in the auto industry, are at 20%. So at this point, Tesla, with 1/10 of the amount of cars that Toyota makes, already makes 7% more in gross margin than Toyota and double than Ford and GM. That's kind of impressive, especially when you take into consideration that Tesla have an ace up their sleeve, which is the entire business that none of these other companies actually have to offer. It is called the full self-driving, FSD. Now, that business model, when it actually goes full-on available, right now it's in beta, will generate income that none of these other guys really generate. Some auto manufacturers have what you would call SaaS, software as a service income, but nobody has anything they can charge up to $10,000, $15,000 per year for FSD like Tesla does. And as far as we know, there's not a lot of competition in the full self-driving and autonomous driving market anyways. It's basically Tesla and Mobileye and a few other competitors, but Tesla is far ahead of the industry in this section. And that's not even the end of it. The thing is, if you look at how their efficiency is progressing, it's actually quite alarmingly good. And I don't know if you can say alarmingly good, but it's just impressive. Tesla's operating margin is 15% in the Q4 financials. Now, that 15% independently is quite high. But just looking at last year, Q4 of last year, the year before, they had 5%. So they've tripled the operating margin in a single year from 5 to 15% with just under a million cars. Not to mention that this 15% is actually a little bit misleading because it should have been about 17%, since you had a lot of one-time expenses there for Elon's salary, the payroll taxes, the stock-based compensation. But let's ignore this because you know what they say, if grandma had wheels, she would be a bicycle. Nobody cares. So even with ignoring that, tripling your operating margin in a single year is just something really hard to ignore as far as where this company is headed. They definitely are priced to have a lot of upside in the future. Insane amount of upside. But it seems that so far at least, they have been delivering quite consistently. And in this respect, we have to talk about the growth. The growth that Tesla is showing in revenues is quite spectacular. We've never seen anything like this in an age-old industry like the auto industry. If you look at Ford, they grew their revenue last year by 5 to 6, maybe 7%. GM grew by 3.5%, 4.5%. Even Toyota, the kings, are at 17%. You know how much Tesla is? 71% revenue growth in a single year. And before you jump in and say, well, Tom, there's a lot of non-automotive aspects in there. I agree with you. But just the automotive revenues grew 66% from 9 to 15 billion from the parallel time last year. 66% growth in the auto industry on a year-to-year basis with 1 million cars. And just think about it. In next year and the year after that, with the capacity that they have from Austin and Berlin, we're talking about 3 million vehicles, which is quite a significant ramp up that's supposed to happen in the next year or two, which will only push this up. And for a long time, we had this criticism about Tesla, basically talking about Tesla is highly reliant on regulatory credits. And a lot of analysts were talking about regulatory credits are too dominant in the revenue structure. Now, this quarter, they went down from 400 to 300 million. So a decrease of 25% in regulatory credits, only representing about 300 million out of 15 billion. It's very hard to claim that they're dependent on regulatory credits. And even if you look at the free cash flow, because again, one of the more common criticism about Tesla is that they're not profitable, they're not cash flow positive, which couldn't be further from the truth. Their free cash flow actually grew by 50% in Q4, from 1.86 in the parallel time last year to 2.77. That's a 50% growth. And mind you, that $2.77 billion in free cash flow came after it spent $1.8 billion on building 2 factories. Without those 2 factories, we're probably looking at about $4.5 billion in free cash flow. That is insanely efficient. Not to mention the fact that just in 2017, this company was making $9.5 billion per year in revenue. Within the past 4 years, they've 4x this amount. And this year, they ended with $48 billion. So 4 times more revenues in 4 years. And obviously, growth isn't everything, but it's so indicative of where this company is headed. And while everybody else is basically stagnating, Tesla is exploding out of the stratosphere. Now, nobody knows exactly how this thing ends and how it plays out. But it seems right now that the trajectory of Tesla is basically to pass a lot of the classical OEMs in the near future. And we'll see how it plays out. And you just got to look at the ramp up of their factories and their production just to see how impressive what they've done in the past few years. Even if you don't like Tesla as a stock, you got to appreciate the excellence in execution. So this car made 180,000 vehicles in the parallel quarter last year. This quarter, they produced 305,000 vehicles. That's a massive ramp up. Even with stuff like supercharger network, in which they're already kind of leading the way, nobody's even close, they've increased 35%. They went from 23,000 units in the parallel quarter last year to 32,000 units in this quarter. That's a massive increase. And you have to understand that for a lot of people, the supercharger network is probably the most dominant consideration in buying a Tesla over like an ID4 or an ID3. Because that supercharger network, unless you live in a residence where you can install a station, if you live in an apartment building, which is very predominantly common in Europe and in places like Russia and the entire EU, apartment buildings, it's a real challenge to install your own charging station at home. So having the supercharger network is a huge consideration in buying a Tesla. And right now, nobody is even close in the amount of infrastructure they can offer to you for quick charging. Because nobody wants to spend an hour charging their car one day on the way to the road trip or to work or whatever. Look at the amount of employees they had. In 2017, they had 30,000 employees. 4 years later, they're at 100,000 employees. 4 years ago, they made 100,000 cars. This year, they made 900,000 cars. They've 9x the amount of cars they produced in 4 years. That is nothing short of spectacular. And even if you look at it from an accountant perspective, their balance sheet is as pristine as I've seen one. They currently have $62 billion in assets on their balance sheet. None of it is goodwill, which means all of it is actually monetizable. If you compare it to the $30 million they have in liabilities, that's 2 times more assets than liabilities. That's very uncommon for auto manufacturers because auto manufacturers tend to be very leveraged. For example, Toyota holds about $50 billion in cash. That sounds like a lot. But they also have massive debt, $220 billion in debt. Ford also have $100 billion in debt. GM have about $24 billion in cash, $85 billion in debt. All of these other auto manufacturers are so leveraged, it is completely insane. They are making a lot of cars, but they're basically collapsing under the weight of their own debt. Tesla holds about $17.5 billion in cash and only about $9 billion in debt. And that debt is decreasing. So they have 2x more cash than debt with only 1 million cars. The other guys are making 10 million cars and they're crumbling under the weight of their own debt. But despite all that, it seems that the stock has not been running up this year. While GM took a beating this year with minus 9% in the past year, Ford actually ran up 53%, and Tesla did only 6%, which is an underperform compared to the S&P 500. Now, Ford is actually still in the game here because they do have the segment in which nobody's yet competing yet, which is the trucks. Ford has their F-150 series in which they are the best yet, and this is the biggest market in the US, and until somebody proves they can overtake Ford, they're still going to have a lot of sales. So Ford at least have the trucks to hold on to their leadership. GM is basically just talking a big game, including the Super Bowl lately, but there's not a lot of EVs in the market with GM. The Bolt didn't really pan out for them, and some of these cars who are still in development are not still on the road, and the Hummer is still kind of just releasing slowly, so there's not a lot of out there for GM and Ford to talk about beyond concept cars and what will come in the future. The thing is, with demand for Tesla justifying 3 million units, which I think they will hit in the next 2 years, and with the possible FSD revenue going up to 80% gross profit when it actually launches, Tesla stands to make a lot of money in the EV industry. However, nobody really knows, and that's why I urge you to do your own research. Go and read about FSD, about Tesla, read their financials, read the stuff that come out from the mainstream media, read the research papers. Go and educate yourself about Tesla, about GM, about Ford, about Toyota, and make a decision if Tesla is actually 16 or 32 times better than these other auto manufacturers. Because if you do think that Tesla can take their lunch in the next 5-10 years, it's worth considering as a potential investment. Of course, you gotta do your own due diligence. This is not financial advice. I'm just giving you kind of the taste so you can go out and research for yourself. Now, I want to hear your opinion below. Let us know in the comments what you think about Tesla. If you're bearish, you're bullish, and mostly if you can provide some insight as to why you're either bullish or bearish in the stock, we'd love to hear your opinion. See you in the next video.